So last Monday, my next guest wrote that doves can take out hawks in December, citing the three Ps: Powell, productivity, and payrolls. Joining me now, RINMAC Head of Economic Research, Neil Dutta. Neil, can we check off all three? Or can I just check them off, or not quite yet?
I mean, I think we're there. I mean, the door is definitely cracked open, Charles, now for the Fed to start thinking about rate cuts. There's a lot of disinflation in the pipeline. It does feel a little bit like last year. Remember, this time last year, the markets were pricing in cuts, and we ultimately ended up hiking again.
Right.
But I think, for me, there's a lot more conviction in the disinflation process that's happening.
You actually, to jump in, you had actually taken on Wall Street economists who kind of prematurely called I remember Bloomberg had this one survey, and every single economist said that we were going to be in a recession. That was supposed to be earlier in this year, right, a year ago. So everyone was on the same page, and you kind of took on the establishment, so to speak.
Well, thank you for that. No, I mean, there wasn't a recession, but I also think right now the debate really isn't so much about whether the Fed cuts, but when they do.
Right.
And I tend to think that they'll do it a bit sooner.
Are you surprised then? I had two guests before you, Sarah and Aaron, who are saying, well, Aaron's saying there's still could be rate hikes, and Sarah's saying late next year maybe on rate cuts. Are you surprised, though, that there's still people out there, or is it just are they intimidated by the Fed and all the sort of hawkish talk out of the Fed?
It could be. I mean, people definitely anchor to some of the Fed speak, but it's important to remember that Jay Powell has done rug pulls before, right? I mean, we're a long way from neutral. A few months later, he's cutting in 2019. Or we're not thinking about tapering or tightening, then he ends up doing both at the same time. We're leaking to the Journal that they're going to go 75 after not saying that they would go 75. So I think it's important to focus on the data, and the data are signaling that inflation is moderating quite rapidly. We could be talking about core inflation potentially below 3% by March. And if that's the case, the Fed has all the evidence they need at that point to cut.
So let's just say we get the cut earlier than consensus right now. UBS is saying 275 basis points, much, but that would be, I mean, to me, that sounds like you're battling an economy that's in a death spiral. That if the Fed would have to cut that much next year, the economy would be in trouble.
Well, I mean, right, and so it's stock prices. I think what we're going to see is probably more of like a 95 scenario where the Fed's recalibrating policy. Remember, in 94, they hiked a lot. They walked some of it back. 95 was actually a pretty good year for equities.
I'm going to pull up a chart for the audience. It's the last 50 years of the 10-year bond yield, 10-year yield, right, 10-year note yield. And it seems like every time it's starting to rally, we needed something huge, like a huge economic event. The Continental Railroad bankruptcy, the 87 market crash, the Mexican peso, the Asian crisis. That's the first time I ever heard of the Thai baht. That shows you how ignorant I am. The dot-com bubble, right? The great financial crisis, the European credit crisis, the 2018 stock market sell-off, of course. So we do have some signs, and you even wrote about, for instance, the NFIB, saying that they're going to raise prices. I saw that report. So we do have some elements of inflation that seem stubborn. If that needle doesn't move, what we need something cataclysmic to really whack yields down and to keep them down?
Well, I mean, if the NFIB number's right, I mean, that's showing that small businesses still want to raise price over the next 6 months. And if that ends up happening, and I'm wrong about the inflation outlook, the Fed may have to get more aggressive later.
You heard Don Luskin. He put on the pom-poms, man. He said the deflation thing is exactly what the doctor ordered. What do you think about that?
Well, I don't think that's the way the Fed's thinking about it. The Fed's not thinking about, because prices are up 20% over the last 3 years, that we need to get back where we were in 2019. I mean, to do that would require interest rates so high and unemployment so high that no one would really want that. So it's really about the rate of inflation, and that's what the Fed's thinking about. Right. And so when you think about a Taylor rule, like sort of, taking the unemployment rate and inflation and trying to figure out what that means for the Fed funds rate. The Fed rate right now is in a good place, and if we're right about inflation, they have room to cut next.
I've read between the lines and listening to Powell throughout this entire episode, particularly those Senate hearings and things like that. I think he knows he kind of blew it on transitory. In my mind, he wants this soft landing desperately. For his legacy. But I'm asking that because I'm bringing this up because you talked about what nobody wants in terms of economic carnage. How much does the politics casting a shadow over Fed decisions? I know people say it doesn't, but it seems to me it has to a degree.
I tend to think that the Fed's following the data, and that's my view. So I would probably be one of the people that would say that they're not that politically motivated. Certainly I think that They probably could have started the hiking process sooner.
Right.
And maybe there was some politics around that. I mean, then he gets the nomination and he starts to shift. But I generally think that they're following the data pretty well, and policies where you'd expect it to be given the inflation on it.
So not too concerned about legacy.
I mean, I think right now, if you had to grade them on a curve or the Fed, you have to give them relatively high marks. I mean, it could be a lot worse for the U.S. I mean, think about what's going on in Europe. They have much more entrenched inflation. Obviously, the U.K. does as well. By contrast, we're growing pretty well, and our inflation's lower than our peers.
And the employment part is hanging in there a lot better than people thought it would.
Sure.
Neil, thank you so much. Appreciate it.
Thanks, Charles.
All right, folks.